our YouTube presentation. We're simulcasting this from YouTube. I forgot to hit the start button. My bad. Welcome for those for YouTube. Mario, Con, Gregory, Michael, Steve, Susie, Michael again, Shane. Excellent. Good to hear from you guys. And those of you joining us on YouTube, I'm sorry. You missed the first 8 minutes because I forgot to press start. My bad. I'll make it up to you. Now, why is this such an important topic? Well, let's go to the core here. Why do we work in the first place? Now, if you surveyed 100 people and asked them why they go to work, you might get responses like, well, it's a contribution, it's a sense of achievement, maybe it gives us purpose in our lives. But I guarantee the overwhelming answer to this question would be for the paycheck. The paycheck enables us to live hopefully pretty well today and allow us to save money for the future so we don't have to work one day. Now, the hard truth is that without a system to help you generate the income you need, you're basically stuck trading your time, your life, for money. In other words, without an income system, it's on you. And that creates a number of problems for us. If you're not retired, it keeps you stuck in the situation where you have to continue to work in order to live. It means you're trading time or life for money. Whether you got a lot of money or no money at all, concerns about finances are one of the leading causes of stress. And worrying about whether you'll have enough or if we'll run out of money, that can have a huge impact on our lives, our health, and even our relationships. In other words, we can't stop until we have enough. But we don't really know what enough is. So we keep working to get enough. It's just like that hamster on the wheel, right? We're taught to work for some future event called retirement when we can finally stop working so hard to enjoy ourselves. But in my opinion, working to save enough for retirement on its own is not truly the best approach. Because if you're already retired, you may watch that savings get depleted faster than you can fill it. And if things don't improve, you may have that fear that you'll have to give up on your investments and go back to work. In worst case scenario, you might run out of money during retirement, or your standard of living will drop and you really can't live that lifestyle you want. But with a system to help you generate income, things are a lot different. Now, I think that this is one of the most important points of the webinar. So listen, write it down, remember it. In order to be financially free, our main need is income. And this is why most of us spend the majority of our lives working for a paycheck. However, in order to become financially free, you need to learn to generate enough income from your investments that covers your expenses and lifestyle needs. So I'll say that one more time. In order to become financially free, you need to learn to generate enough income from your investments to cover your expenses and lifestyle needs. Now, whether you're working or you're retired, the ability to generate income from your investments is really one of the most empowering skill sets you can have. Now, I want to be clear here. I'm not telling you to learn this and go quit your job, okay? But when you have the ability to generate income from your investments, your life will change. If you're still working, you can increase your earning capacity. It's like having a second job. If you're retired, you can have a consistent source of income like you quit your job, but you keep getting paychecks. It's like a tap, right? You can turn it on when you need it, turn it off when you might not. Or if you're on vacation for 4 weeks, turn the income source off, turn it back on when you're home. That's going to allow you to do the things you want to do now and when you retire. And that's really why today's webinar is vitally important. When you've got that system to help you generate income, it can help you retire a lot sooner. And when you're retired, our system can help you live a wealthier life. I'm still working. A lot of you folks are still working like me, right? It also lets you live wealthier as you're still working to create that additional income source. Now, I believe this is one of the most important points of the presentation, so I want to repeat it one more time. When the income from our investments exceeds our living expenses, we become financially free. We can retire. In my opinion, learning how to generate income is more important than how much we earn in our jobs. Why do we work? We work for the income. It lets us live. We can stop doing that when the income from our investments generates enough for us to live. And you'd really be surprised at how little you need to get started. Brian's a client of ours who's a great example of how easy you can start doing this, even if you don't have a lot to invest with. He had some health problems and needed a way to supplement his income. He said by using the Paycheck system, he was able to generate $23,000 in profit, starting with just $6,000. He said he had a 100% winning trade rate in 10 months, 31 of 31 winning trades. Now, that's not beginner's luck. It was the result of following the system. That system is what helped Brian get that 31 for 31, 100% winning trades and create that 23,000 in profit in 10 months. And he did it safely. Now, the first thing you need to do to take control of your returns, here's that strategic mindset shift. You're either going to continue being a gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Being an option seller is the way you can make consistent income each month. It allows you to win even when you're wrong. Now, the reason you want to be the casino in our case here, or the house, is because the house always wins. And number two, the house always wins because it controls and stacks probability in its favor. They know the angles. They take that away from the game. That's why the house always wins. The Paycheck system is the same idea. It's built around you stacking the odds massively in your favor. So make a note of this. In order to control your returns and results, you need to know how to control and stack probability in your favor. The house always wins because it stacks that overwhelmingly in its favor. So the obvious question is, how do we do it? The first step, shift from being the buyer of options to being the seller. So let me explain. I'll introduce Bruce. He's a great example of that shift from gambling on stocks to being the casino and controlling and stacking probability. Prior to working with us, he said he had mainly taken stock tips from brokers. Bruce focused on our income system based on the S&P 500. It's our most basic trading system. As he said, he's not the most technical in the world. But in the time he's been working with us, he's grown his trading account from 100,000 to 497,000 in 3.5 years. He's achieving a 74% win percentage simply by following the rules of the Paycheck system. And he said the whole system takes him around 15 minutes a day. So let me show you how this works. This is again an example of a typical trade you've been taught to make. You find a stock that you like, you think it's going to go up, so you maybe buy 100 shares of it. Or as the option trader, you might buy a call. Why do you buy a call? Well, that's the basic option trading. It's what you were taught to do if you learned options. When a stock goes up, you buy a call, and that gives you the right to own the stock. But most importantly, as the stock goes up, the call that you bought increases in price. But what ends up happening a lot of times? Well, maybe something like this. The stock doesn't go up, or it doesn't go up enough, and what ends up happening is that call that you bought expires worthless. Has that ever happened to you? Well, that was my first introduction to options. What's the real problem causing you to lose here? Now, most people, when they are polled, they say, well, Ron, I picked the wrong stock. It just didn't go up. Or, you know, Ron, I'm just learning this option thing, and maybe I picked the wrong strike price, or maybe I didn't have enough expiration. The real problem, if you've been losing money or had more losers than winners with other systems, it's not your fault. That's because most of the systems on the planet teach you to be on the wrong side of the trade. You're taught to buy an option, same thing I did. But as a buyer, the probabilities are not on your side. And for most people, they end up buying and losing and buying and losing and buying and losing. Our Paycheck system teaches you a new way of thinking. You need to be a seller and not a buyer, because that's how you get ahead of everyone else. That's how you put probability on your side, and that's how you can win even if you're wrong. So let's take a closer look at this idea. Let's take a stock, okay, and let's say we're bullish. We want the stock to go up. A typical trade that you make on a stock basically gives you a 50-50 chance to win, right? Because if the stock goes up, you make money. If it goes sideways, you don't. If it goes down, you lose. So what we're going to do is we're going to have that shift. Instead of having a buyer's mentality, we're going to have a seller's mentality. Instead of hoping a stock goes up, as a seller, you're going to strategically set up your trade using probability. Probability tells you where the stock is not likely to go. So instead of needing a stock to just go in your direction, I can pick a price on the graph that says, hey, as long as it doesn't go here, I can make money. So I picked a price, the current stock's at 203, I picked a price at 195. Now what I've done is I've created a scenario where I can make money if the stock goes up, which is what I think will happen. I've created a scenario where I can make money if the stock goes sideways, which I don't want to happen. And I've created a scenario where I can make money as long as the stock stays above 195. If it goes below 195, I will take a proportional loss, and we'll talk more about that a little bit later. Now, when you really learn options better, right, you can even increase that probability more. The stock was at 204, now I've chosen 190. And again, I want you to think about what I've done here. I think the stock will go up. If it goes up, I make money. If it goes sideways, I make money. If it goes down, I can make money. And as long as it stays above 190, I'm profitable. If it goes below 190, I take a proportional loss. Now again, what you've done is you've just turned that from a 50-50 trade into a 70% chance of success. And you can only do this as an option seller. As a seller, you're putting the probability of success in your favor, and that's why I call this an income trade. It's my definition. An income trade is where you can make money even if you are wrong on direction. So let me introduce another one of our clients, Mike. He's dabbled with options, but he said he lost on each trade. Have you ever been there? I've never been there, quite frankly, but I was pretty close. My first options experience was buying options, and I probably only had 3 or 4 out of 10 trades win. But can you imagine how frustrating that must be to lose on each of your trades? Eventually he said, you know what, maybe this option thing's not for me. He went back to it a couple years later, tried to learn a little bit more, took some courses, but he said he never felt comfortable he knew what he was doing because he knew a bunch of option theory, but he didn't have a set criteria of how to operate. So we worked together. I taught him the Paycheck system, and he said he became like an immediate income machine. It turned a switch. As soon as he implemented the system, he went out and he said he had 17 out of 19 winning trades with a profit of over $12,000 in 4 months. The key lesson here is going from buyer to seller or becoming the house. That immediately turns his situation around. Like Brian, like Bruce, and like Bobby initially, and like Mike. Now, he was so proud of his success, he even sent me a spreadsheet of his trades. Now, here's his results. First off, I want you to take a look at the profit column. A lot more profits, obviously, than losses. And then take a look at the work days to close. These trades are not day trades, so you don't have to be sitting in front of your computer for 30 hours a day. Bobby, at the beginning, was a pretty good candidate for that, right? Working 80 hours a week, but still having time to put a few trades on. Every 7 to 10 days, he's pulling in about $1,000 in income. And he's averaging over 85% winners. In fact, our most simplistic system, the S&P 500, has averaged over the last decade about 85%. Okay? And again, you're going to go from being the gambler to being the house, where the rules and everything are stacked in your favor on every trade you take. You know, a key takeaway here is this. Home runs look good, but singles are what wins the games. You need to get on base. If you want to become a run, you got to get on base. And it's nicer when you can do it at a high percentage. What do I mean by the trading world? You know, I could sit here and seduce you with, oh my gosh, I made 2,300% on this one trade and pull out the best trade of the year that I might have had. But everything else is losses. I'm not about that. I'm about showing you a smooth, steady income and realistic approaches. Okay? Now, you've seen by flipping from the buyer to the seller, you stack odds significantly in your favor. You saw that on those charts I used where now as long as the stock stays above 190, I have a 70% chance of success. Now what we're going to do is we're going to stack the odds even more in your favor by understanding and capitalizing on 3 most common buyers or gamblers' mistakes. So mistake number 1 is that option buyers choose unrealistic strikes. They choose option strike prices that are very far away, and the stock ultimately has very little chance of hitting it. So here's a stock. Let's say you're bullish on the stock, right? It's at 216. A mistake a lot of option buyers make is they buy calls with strike prices way up here, and they do it even though the stock has a very little chance of hitting it because these options are cheap, right? Instead of spending $2,000 on the correct option, they buy those up there for like $50 under the assumption of, well, the worst case scenario is I lose $50. Well, the problem is you lose $50 over and over and over and over and over again, and you never make money. Many buyers treat options like lottery tickets, and most of the time they lose. Now listen, There's always going to be buyers out there who buy these options. We may as well be the ones who sell it to them because we're selling an option that has a low probability of getting hit. And when I say getting hit, this is what I mean. Stock's at 216. If the stock rises to 230, that means that gets hit, right? Since it has a low probability of getting hit, that means we have a high probability of making money. And the same thing goes if you're doing this with puts. There are people out there who buy puts way down below the market, right? Now, sometimes they're doing as lottery tickets because they think the stock is going to go down, or sometimes they're even buying these puts as protection from their underlying stock trades. Either way, doesn't really matter why they're doing it. The fact is, there's always going to be those buyers out there buying these options. And since they're there, we are going to be the sellers of those. Because when we sell it to them, we have that 60 to 90% probability of success. Okay? Now, the second mistake that a lot of buyers make is they choose expiration dates that are simply too close to the current date. It's like when you go to a grocery store and you see a piece of steak on the discount rack. Yes, it's cheap, but unless you cook it that day, it's going to expire and you're going to have to throw it away. The same is true for options. This is what happens to the price of an option as it gets closer and closer to expiration. So in the top left-hand corner, that's 180 days to expiration, and in the bottom right corner, that's when the option expires. I want you to notice from the beginning to about 135 days in, right about here, that option lost half of its value. In the remaining 45 days, the decay became exponential. Okay? In the last 45 days of that option's life, it lost the remaining value. And what took 135 days has now been shortened to 45. And what happens is a lot of buyers, they buy those options down in that final week, 2, 3, 4 weeks because they're cheap. It's like buying that lottery ticket, but you're stacking the probability against you. What we're going to do is we're going to use that to our advantage, and we are going to sell in this window instead of buy. All right? Now, I'm going to use an example. This is a graph of Home Depot. And let's say that, right about here, you think that Home Depot is going to go up. All right, let me turn my laser pointer on just so you guys can see the point a little bit more. Oops, that's not the laser pointer. That's the laser pointer. So right here, you think that Home Depot is going to go up, right? So you buy a call. Well, what happens if you buy a call a couple weeks away? Or maybe you say, you know what, I'm going to buy a call even a month out. Well, the stock gradually went up. But the problem is, even though the stock is gradually moving up, that time decay comes in there and wipes out all your gains. The time decay eats away at the premium. So even if you get direction a little bit right, the time decay eats all of that profit. Now, as an option seller, we let that time decay work in our favor. Now, like I said, there's always going to be people out there buying options that have expiration dates too close. We are going to be the sellers of those. Let them be the gambler. We are the casino. We will always win in the end. Now, the third mistake that buyers make, this is one that's not as well known to a lot of people, but it's one of the very important elements of this. They buy what's called overpriced options. They simply pay too much. Let me show you an example. I've got two stocks here. Both are around the same price. They're about $76. Even though the stocks are same price, the options have vastly different prices. Same expiration, same strike price, same price of the stock. Over on the left, the option premium is $9, or that option would cost you $900 to buy. Over on the right, it's $1.80. That option would cost you $180 if you wanted to buy it. Okay? The reason they have those vastly different prices is because of a little thing called volatility. When volatility is high, like you see on the left, that makes option premium very, very expensive. Now, what's the difference, right? Premium's expensive. Who cares? I have $1 million in assets. I'm buying an option for $900. Come on, Ron. It's not that big of a deal. Well, it's not about the cost. It's about the effect. Let's simulate both stocks going up $8 per share. Now, think about this, right? If you'd have bought 100 shares of each of these stocks, you would make $800. But you don't want to put the money out for that, so you go out and you buy a call. Well, both stocks go up $8, but what you're going to notice is that one on the left, you actually would have had a losing option trade. You wouldn't make any money. You lost money. The stock went up $8 and you didn't make a dime. Now over on the right, you made $720, right? It's almost 3 times the return. Why did that happen? It happened because of volatility. When options are priced too expensive, it makes it really hard for you as an option buyer to be profitable. However, those expensive options that we just saw, those make really good selling opportunities for us, because the more premium that we sell an option for, the least amount of risk, dollar risk, we would have on the trade. And that also gives us more probability. The higher the premium, the more probability we can sell and add to our trades by selling options that are further out in price. You're stacking probability even more on your side. Now, Bob, another one of our clients, he's got one of the most interesting stories I've seen. Prior to working with us, Bob said he was making a bunch of the mistakes we talk about here, and it cost him dearly. In fact, he said he ended up broke or bankrupt 3 times, and in his own words, came close to living under a bridge. Now, the Paycheck system helped turn his situation around in 4 months. He learned to turn these mistake liabilities into strategies that controlled and stacked probability. In 4 months after the course, he said he grew his account by 71% and had a 79% winning trade percentage. This is not beginner's luck. In order to do this, you have to learn how to control and stack probability, i.e., you have to have a system of option selling in place to get this done. Now, let me ask you all a question, okay? Get your chat windows ready. I'm interested in some of your responses. For those of you that have option buying experience, have you ever made one of those option buyer's mistake? Share with me. Type a yes or no in the chat box. All right. Yep. I see an avalanche of yeses, right? Michael and Bill and Arthur and yeah, Robert blew up 2 accounts using options. We don't want that to happen again. Aziz and Robert, yeah, and the folks on YouTube as well. So here is the bottom line. All right. Everyone's made those mistakes, myself included. It's not your fault. You were just taught a broken system. That's all. You just weren't taught how to trade options correctly. So now that you know being an option seller is the way to income, let's look at how to trade with very little risk. Now, when a lot of people hear the word options, and especially the term selling options, they think it's really risky. The Paycheck system uses a low-risk strategy for selling options, which is why it's one of our core strategies that we teach to all retirees. Now, why is reducing risk very important? Well, one of the horror stories I always hear is, well, Ron, I did this in the past, but then I had one trade and it wiped out a bunch of winners, right? I personally have never had that happen. And it's not because I'm some fantastic options trader. It's just because I would never take a trade where that risk is in play. I would never take a trade where if I lost on that trade, it would cost me 7, 8, 9, 10, 3, 4 wins. That's all known in the trade setup. That's why this is safe. You know the risk up front. If you do this and you have that one bad trade that wipes out a bunch of winners, that makes it very hard to recover losses. Okay? It takes a long time to recover. So when you do it right, we do it with a built-in protection plan. We're going to take care of risk management before you even open the trade, because that is what's going to help you preserve and then allow you to grow your capital. Your first job as an investor is to not lose money. Preserve your capital, because then you can grow. It's like I talked about earlier, right? Home runs look good, but the singles are what wins the games. So one of the most common questions I get asked is, can I trade these from my IRA? Well, most of the time the answer is yes, you can do this in your IRA. Always check with your broker first, of course. A client of ours, John, he was able to do this in his IRA, grew his IRA over 112% in 1 year using our Paycheck system. He said he tried and struggled with trading for some time before working with us. He learned to follow the system and turned his inconsistent results into predictable monthly income. In 12 months, he said he had an 85% winning trade rate and doubled the size of his IRA. And he said he spent no more than 15 minutes per day doing this. Okay? Now, the Paycheck system, all right, the Paycheck system makes sure you reduce your risk before you even open the trade. Number one, we choose stocks that are low risk. We have a very specific criteria, but in general, if we're bullish, we start by focusing on good stocks that are rising in price, similar to what you would see here. Now, to take out the concept of one bad trade spoils a bunch of winners, we do not sell what we call naked options, okay? Instead of selling a naked option, we sell with protection. So let me show you how to do that. Traditional option selling systems leave you with all of this risk, right? If the stock were to fall $35 a share, you would take a catastrophic loss. What we need to do is shrink that risk. Our Paycheck system shrinks your risk to this. So let me show you how this works, kind of in a step-by-step manner here. Now again, this is a graph of a typical stock that we'd be bullish on. And it's understandable. It's moving left, lower left to upper right. It's a good looking stock, right? Now if you're bullish, you might go out there and buy 100 shares. You may even use that price of 137 to buy a call. But no more buying. We're going to be the option seller. So here's what we're going to do. In a bullish market, we are going to sell a put below the current stock price. This is essentially your line in the sand. I'm choosing 135. If the stock goes up, I win. Sideways, I win. Stays above 135, I win. That's my line in the sand. Now, when I sell that option, I actually get paid. That money is deposited in my brokerage account. I would get paid in this example $200 per contract. Okay? If I did it with 10 contracts, I would be paid $2,000. However, one thing to note here, a lot of people don't tell you about the risks of option selling. Look at that, you just made $2,000. No, you didn't. You pulled in $2,000, but you still have a trade and an obligation on the table. If the stock were to go down tremendously, you would lose that $2,000 and a lot more of it. Okay? That's unacceptable. I can't do that. I can't have a trade where I'm making $2,000, but I can lose $10,000 on it. I can't have that. So what I do is I take that $200 and I buy an insurance policy. That's going to help me reduce my risk down to this amount. So even if the stock collapses and goes to 110, my risk is only right here. That's it. My risk is $130 a share. Now, that costs money. That's called an insurance leg is what we call that, and it's going to cost us something. When I buy that put, it costs me $100 per contract. So I collected $200. If I did 10 contracts, I'd collect $2,000. If I did it on 10 contracts, I'd pay $1,000 for my insurance to reduce my risk, and I still ultimately get paid $100 to place that trade. So if I did that on 10 contracts, I would receive $1,000 in my trading account. Now, that doesn't mean you're done, right? A lot of people get this impression of, well, Ron, I sold an option, so I'm done, right? No. When you sell an option, it's like an insurance policy, okay? Now, don't get confused about the insurance leg. When you buy insurance for your car, what do? You send a check, you do electronic funds, whatever you do, right? Let's say you pay $2,000 a year for your car insurance. When you pay that $2,000, the insurance company collects it, right? They're the seller. But they don't just get to collect your $2,000 and walk away. They have to give you coverage. If you wreck your car, guess what? You are going to have coverage on that loss. Options are the same thing. When you sell an option, you have an obligation. In this case, we have an obligation to possibly buy the stock, which I've never ever done before in an options trade, but you have that obligation. What we're going to try to do is we're going to stay away from that obligation, but we have to take this trade as like any other trade. When we enter the trade, we get paid $2,000, or I'm sorry, in this case, $1,000. That's our entry. When we exit the trade, we are going to pay money to exit the trade. okay? It's like any other trade you do. You enter it and you exit it. There is no you sell an option, you're done. It's a trade. You enter it and then later you exit it, okay? Now the beauty again of this sequence is this. I think this stock's going to go up. If it does, I make money. The options that I sold become worth less and less money, and I can exit those for less money. If the trade goes sideways, I still make money. Time decay. And as long as the trade stays above 135, I can still make money. And if the trade goes below 135, I exit the trade. No different than what you would do if you bought 100 shares of stock, right? I hope at this point none of you would buy 100 shares of this stock and just let it go to 100 bucks. At some point you would have a stop in there to say, you know what, I'm giving up. The stock's not going to go up anymore. I'm going to take my loss. That's what 135 is here, okay? But I've created a scenario where I can make money now in all three scenarios. Up, sideways, or down a little bit, I can still make money. All right. So let's do this. I want to use a few examples of some trades I did with my clients to help you better understand how to set them up. So make sure you're listening. This is going to be important because I'm going to show you some numbers and I'm going to show you some graphs. I really want your feedback here, okay? Now, this is a trade that I took earlier this year on Goldman Sachs. I believed that Goldman Sachs was going to go up. So my initial prediction was that Goldman Sachs was going to go up. But I don't want to put on a trade that's 50-50, okay? I don't want to do that. What I want to do is I want to increase my percentage of probability. So I go out there at 311, that's where the stock's at, and I pick a price underneath the stock for my line in the sand essentially. Now, I don't want to get too bogged down in details here, but I do want to explain something here because a lot of people look at this and say, well, Ron, I'm just going to go right down here at 265 and I think that's a good line in the sand. That should give me like a ton of probability, right? Yes, it can give you a ton of probability if I choose this as my line in the sand. But the problem is, remember that whole thing of one bad trade wipes out a bunch of winners? This is the kind of trade where you can make $10 on, but lose $1,000 on. So you have to be realistic. I can't go, so far back out of the market that it gives me 99% probability, right? I have to be realistic. Within the last couple of bars, I need to choose an area that's going to have the perfect risk to reward ratio. Remember I said if it goes below our price, we need to have a proportional loss, pardon me. I want a trade where maybe I can make 400, but risk no more than about 500 with a 70% chance of success. So based on what you see here, I want you guys to throw me out some numbers. Knowing what I just gave you a basic idea of, where do you think, Goldman Sachs being at 310, where do you think a line in the sand would occur? And also seeing what we did on the previous example and even the example of Costco back from the original start of the class. What do you guys think a good price would be for your line in the sand? Okay, 305. 305 is not too bad. That's pretty close. 295, 300, 295. Terrence, 300, 300 Michael, 297 Rashid. Paul's at 280, 295, 295 for Gregory. Jesse, 300. Steve, 290. All right, Mario, 300. All right, so I got all of you in the proper thinking here. That's good. I didn't say all of them, but I got you in the proper thinking. A lot of the numbers were based right around here, okay? Now, where this trade was actually taken was at 300 and 290, all right? That gave me almost $12 in room to be wrong. Now listen, I would have loved to go out there and sold a 270, 260, right? All the way down here at the bottom. But again, that sets up a scenario where you might make 500 bucks, but you might have to risk 7,000 to do it. And that's unacceptable because that's one trade wiping out a bunch of wins, all right? So here was that trade in real life. On February 16th, and you can see my transaction. In the same transaction, I sell a 300 put. I sold that for $7.07. In the exact same transaction, I bought a 295 put and I paid $5.50 for it. That gave me a credit of $1.57. Now remember, options are based on shares. One options contract is 100 shares of stock. So when I sell that for $1.57, I get paid $157. All right. And I think I did this, I don't remember how many contracts I did, but I ended up making $390 in 8 days. What happened then is on 2/24, the stock went up nice. At 9:30 in the morning, I exited the trade. Okay. I exited the trade for 79 cents. So in a nutshell, what I did here is this. I sold the trade for $157 to enter the market. And when I exited the market, I paid my broker $79 to settle the trade. And I got to keep $390 in profits. And now the trade is settled, closed, and I'm done. All right. Now, I'm going to show you another example. This is Tesla. Interesting enough, because Tesla came up as a trade possibility today for me. Tesla's in a nice uptrend. It broke resistance. So let's zoom in a little bit closer here. Tesla at the time was 525. Okay? So again, get in the seller's mentality with me here. And I just noticed that color was brown on my pen. I don't like that at all. So 525 is where the stock is basically right now. Okay? I want to create probability. Now, again, as much as I'd love to say I'm going to go down here at $400 and $390, I might have a $100 profit target and a $4,000 loss. Okay, that's not going to work. The real price needs to be within the last couple of days ranges, because that's where you're going to get those trades where I might make, $800, but only be risking $1,000. All right. You can't get too much probability. You got to pay for that. So what do you guys think? 525, where do you feel comfortable on Tesla? You think it's going to go up, but you want to make sure you have enough room for it and go sideways and possibly even down. Seller's mentality. All right, good deal. 495, Rashid, you were first. Herbert, 500, 480, 500, 450. Aggie, 495, Con. And then Greg, you said how many contracts? We talk about that. Contracts are based on how much you want to risk, right? We don't want to risk more than like 2% of our account. We build the contracts up so we don't have too much risk. Michael, 485, Tristan, 495. All right, so good. I got everybody in the right concept here, because a lot of times what I'll do without giving any explanation is I'll get the people that want to sell down here. And obviously, listen, it's not bad, but you have to understand the risk element there too. So I did this trade, the real trade on Tesla, I did at 485. Okay? So 485, 480, the stock was at 525. I basically gave myself a $40 room to be wrong. If it goes up, I profit. If it goes sideways, I profit. If it goes down but stays above 485, I still profit. Now, after I did that trade, Tesla kind of shot up the next 2 days. A very big move, very sudden move, which I like, right? So I entered the trade on November 23rd at 2:44 p.m. You can see that I did 8 contracts. This is the number of contracts. For some reason, I took out the number of contracts in that last one. 8 contracts. I sold the 485 put and sold it for $22, and I bought the 480 put for $20.15, leaving me a credit of $1.95. On 11/25, 2 days later at 11/17, I exited the trade for 85 cents. So in a nutshell, right, I entered the trade. The broker paid me $195. When I exited the trade, I gave the broker back 85 of that. I net $1.10 in the trade times 8 contracts, $880. All right? That's where I walk away from the trade. Now, that's what we hope to do, right? 7% move on the stock, 36% return on the money. All right? Paycheck of $880 in those 2 days. Now, another client I worked with is Jim. Now, prior to working with me, he told me his results were inconsistent, and he kind of felt unsatisfied. He said he wanted more of a way to supplement what he was doing that would provide a more regular income with a better chance of winning, a better chance of success. He said as soon as he learned the system, he went out and had 21 winners in a row and returned 76% in about 8 months. His average trade was only 8 days. Can you imagine how that must feel, to where you're inconsistent, to where, boom, you all of a sudden can turn this on? Can you imagine that? Now, let me ask you a question. That was Jim. What about you? Think back to Brian, Bobby, Mike, Jim. Think back to those guys, right? What if you were able to duplicate that success? what would that success allow you to do in your personal life? What would that allow you to do? For if you're young, pay off your student loans, retire sooner, what would that allow you to do? Share with me. Put that in the chat window. I'm going to take a drink of my tea while you guys are typing some examples in there. Things that it would affect you. More freedom. I love it. You know, that's exactly the idea. More freedom, retire earlier, open another business, retire earlier. A lot of you are still working like me, so retire earlier seems to be the mainstay here, which I get. I'm with you guys too. I don't want to work forever either, even though my wife might make me. I hope she doesn't, but you know, she's in charge. Retirement income. Yeah, start actually working for yourself. Jesse, you mentioned that. Make a lot more money. Terrence and Con, you guys also had that too. Increase. Guy, buy a Tesla for my wife. I got my eye on a Tesla next. I keep going back and forth on a car, but my wife keeps complaining to me how terrible of a driver I am. I'm like, I should probably just get a Tesla so I can have autopilot. You know, my neighbor has a Tesla S, and he actually got into an accident with it a couple weeks ago, and it was kind of funny. I was talking to him. He's like, well, I was on the highway. He's like, I think what happened was, he's like, because I really wasn't paying attention. I was reading my book. I'm like, well, you should probably pay attention. Anyway, like I said, some good stories there. I always like to throw that in there. But hopefully he's getting his Tesla back in a couple weeks. It's a little bit harder to repair. Now, we said before that buying is gambling and selling is about controlling that risk and putting the odds of success in your favor. That's what helps you generate income. The Paycheck system makes sure you have a guaranteed maximum risk. Because again, it goes back to that whole gambler or casino idea, because the house always wins in the end. Listen, the house can pay out a $25 million jackpot on a slot machine, but they still make money. You know what I mean? That's how they win in the end. So I showed you earlier I'd wrap it up into a bulletproof system that you can use in as little as 15 minutes a day. And this is important because from your responses, a lot of you are still working. Okay, so you want to say, hey, how much time is this going to take me? And it's a good question. There's a challenge here. There's thousands of stocks, and you got to find out how to pick the right stock, the right strategy. When do I get in? What expiration do I use? What price? What if it goes against me? Where's my profit target? All that stuff. So it feels like you're trying to find a needle in a haystack because there's so much information out there, you really don't know where to look. You spend countless hours researching your trades, or you're going from guru to guru looking for advice. Without a system, you're trading blindly. It's like a mouse that runs through a maze and bumps into the wall after wall. You don't know where to go. Stressful and disheartening. But with the right system, you can identify good trades, get reliable income in as little as 15 minutes a day. But to do it, you need a system. That's what all of those other clients I showed you are doing, a system. Not just any system, a straight line system, a simple way to know when to place your trades, how to find them, how to set them up, how to manage them. So let me walk you through the pieces of the options Paycheck system in the order they go in. Now, no one else I know teaches option selling this way. This is like the secret sauce, right? A lot of theory out there, but not a lot of practical step-by-step advice. There's 6 pieces, the top 5 build on each other, and then the 6th ties them all together. So on the top of the system is market direction. A lot of traders ignore this, right? They just go out and place trades. I think this is going to go up. I think this is going to go down. You don't want to do that. Why? Because 60% of the stock's movement is tied to the overall market direction. Trading in the direction of the overall market increases your chance of success alone. So we break the market down to bullish, bearish, and neutral scenarios. That way, you're only looking for one type of trade at a time, okay? You're narrowing your focus. Market's in an uptrend, we look for bullish trades. Market's in a downtrend, we look for bearish. Then we have a timing system that tells us this. Once we establish that, we go to the stocks. We want to find stocks that are highly likely to move in the same direction as the market. So just trading the stocks you know or listening to gurus, that's not the best choice. You want to find good stocks that are already in uptrends when the market's rising and bad stocks that are in downtrends when the market is falling. Now, the Paycheck system saves time in 2 ways. We look at 2 things, fundamentals and price trend. We have pre-built searches built into our VectorVest platform, which I use instead of digging through data the institutions throw at you. You don't have to needle in a haystack anymore. Now, once you have the stocks, you need to select the best ones for option trader. Remember earlier we talked about volatility? We need to be able to filter out the options that don't have that volatility. The Paycheck system focuses on selling high volatility options in the upper end of that range, but we don't stop there. To take more risk out of the trade, we filter out those with upcoming earnings. Earnings make the stock move really unpredictably, so we filter out upcoming earnings. And then we choose an expiration date that hits the sweet spot of that decay. Now listen, you can use lots of tools from other brokers for this, and they work. I happen to have a proprietary search tool that finds these in just a couple of seconds. Now we get to the setup. We want to pick the one that gives us the highest probability that we can achieve using the strikes, right? Each strike has a probability. We want to get the highest probability that we can get while maintaining a safe risk to reward ratio. I mentioned that in the earlier examples of Tesla and Goldman Sachs, right? Yes, it's nice to have 90% probability, but I want to risk 10,000 to make, $100. Next thing is you need to have a plan in place before you take the trade to take profits, to adjust, and then also to exit. Now, the cool thing is all of the risk, all of everything is known in the beginning of the trade. So you're not going to be a deer in the headlights wondering what you're going to need to do. Okay? If a trade goes against you, we have a simple adjustment strategy that can bring in more income to help minimize losses. We also know, of course, when to exactly exit the trade. And then lastly, if you want to do this the quickest way, you don't want to be spending all day in the process. So you need a tool that allows you to do these things. And hopefully it should be something you're comfortable using. Some brokers like Thinkorswim and IB and E-Trade have really great tools. Some people find that paid tools are going to be more effective. For example, I use a proprietary tool here from VectorVest called Options Pro, and it's built for this, and it saves me a lot of time in the setup. Now, speaking of time, that's what Hugh mentioned to me. He's another one of our clients. We talked about Mike and Jim and Brian and Bobby. Each is getting those results in about 15 minutes a day, and so is Hugh. He told me one of his biggest struggles was finding a system that was efficient and worked. He wanted that proper balance between trading and free time. He didn't have the balance right then. Are you like that too? Do you spend too much time on things you don't want to do and not enough time doing the things you want to? Hugh learned the Paycheck system. He said he had more confidence, more free time, and was able to have a lot more fun. In his first 43 trades, he had 38 winners and returned over $26,000 in 4 months. Again, the system. So let's do this. I want you guys to take your pen. Put a little star next to a part of our system where you're really good at. So for example, if you have a quick way to find stocks that are likely to go in the direction of the market, that's a star. Put a star there. You're on the right track. But if there's an area where something's not working, you're not sure what to do, or you just need a little work, put a frowny face. So for example, if you don't know how to manage and repair a trade, there's a frown. If you're new to options, you don't know how to select options, that's a frown. Now don't overthink it. Take about 10-15 seconds. Give yourself a star or a frown. I'm going to take a quick drink while you guys are judging yourselves. Now, I'm willing to bet maybe 1 in 100 investors will ever know how to do this. So I want you to share with me. Write these down into the chat window for me. What areas do you need to work on? I'll give you like 10 seconds to start typing those into the chat window for me so I can start sharing and reading. I always like to know where people are and what they're learning as we go. All right. Spend less time. Okay. Option selection, Jesse. Perfect. Proper price, Robert. So I'll take that into like the strike prices. Trade management, Terrence. Trade management, repair, Paul. Choosing strikes. Boy, a lot of you guys are in the option. Option selection, Herbert. All right. Here's one right here. Mario, you said I have no experience. Minimum time. All right, good. If you have no experience, that's okay because I can train you to do this the right way. And then bullish or bearish Aggie, so that's more of into the market timing. All right, cool. All right, so here's what we've got. I don't know why you came to today's seminar, but maybe you really haven't known what to do, and you feel like you're trading blindly, right? Bumping into one wall next to next. It leaves you with inconsistent results. Just like Jim did before he learned the Paycheck system. Maybe you've been suffering through loss, and those small losses are killing your portfolio. Maybe the money coming in isn't exceeding the money going out. Maybe you're just not where you want to be. Now, I showed you today the secret to beginning to fix that. And it's a secret I bet only 1 in 100 investors will ever know. And now you're one of them. Okay? You saw it's possible to win even if you're wrong. You saw that we can build it with little risk, even less risk than buying and selling stocks. And you saw the system that's going to allow us to get consistent income month to month. Now, I showed you just a few of the many, many people who use the system every day so they never have to worry about that income stream again. You saw over and over the secret to generating income is to shift from being the gambler to being the casino. You're now going to be the one investor out of 100 who knows that secret. There's going to be 99 other investors out there who do things wrong. They'll be buying options, making the mistakes we talked about. Now listen, we can't stop them. There's always going to be those investors out there who do it incorrectly. Let them continue being the gamblers. As long as they're there, we can operate our casino because the house always wins. The Paycheck system teaches you how to stack probability in your favor. Brian, he learned how to stack the odds in his favor and turned $6,000 into $23,000 in profit. Like Bruce did. Like Bob did. Jim, inconsistent to reliable, 21 winners in a row. Hugh, more confidence, more free time, 43 trades, 38 winners, $26,000 in 4 months. 12 months, John grew his IRA 112% with an 85% win rate. So if you're like most people, you might be wondering, how do I implement this Paycheck system in my portfolio? You have a choice. Option number 1 is you can do nothing. You stay exactly where you are right now. And listen, if you're doing well right now and you have enough to retire and you're not worried about running out of money, then listen, you learned a couple cool things today and maybe you don't need the Paycheck system. And that's great. I admire that. But if you need to make some extra income, that leaves you with 2 other options. Option 2 is do it alone. You can try to learn how option trades work, just like Mike did. Try to figure out the direction of the market, learn to analyze the stocks and find the best ones. Hope you picked it, manage it right. Listen, if you're willing to work hard and spend hours in front of your computer, you might be able to pull it off. But there's an easier way, the path of least resistance. Let me show you how to do it, okay? Let us take you by the hand, walk you through each piece of the Paycheck system, and in just a few weeks, you'll have a simple system to follow that doesn't take a lot of time. So of those 3 options, ask yourself what's going to be easier, okay? Person number 1, there's 2 types of people. Person number 1 is someone who dreams about making their financial goals, but they never take action or do anything to actually make it happen. Now, the second person, they're serious about their financial future. You want to take action when you see a good opportunity. And since you're dedicated enough to be with me to this point, I'm willing to bet you're person number 2, and that makes you the perfect candidate to get started on your first options paycheck. So let me tell you what we put together for you. First and foremost is our options paycheck system. It's a complete A to Z system that's designed to teach you the entire method. So you can generate consistent income each month that allows you to live that lifestyle you want without that fear of running out of money. Now, our clients who I've shared with you today, a couple of them, who have taken this course, they can average 3% per month. But some guys who are a little more active, they can go anywhere from 5 to 15% per month. With an over 70% success rate, it's taking them less than an hour a week. So when I say an A to Z system, let me explain it. It's a 7-module course. We start by building a strong option foundation. That way you know how calls and puts work. So even if you've never traded options before, you have a good base of knowledge. Now in modules 2 and 3, you're going to know how to create those income trades that have that base 70% chance of success. But that's where a lot of options courses leave off. They teach you the theory of options and they leave you there. In module 4, I'm actually going to go out there and show you how to find the right trades. Using the trade selection roadmap, I'll show you market timing. I'll show you things that we look for on graphs, fundamentals and technicals, and how to find the best stocks to do. And we also use indexes, which I'll introduce. Now in module 5, we're going to concentrate more on the options, making sure you get paid the most money, making sure that you're risking not too much, making sure that you're not leaving anything on the table in the setup. Module 6 is all about the trade management. No more deer in the headlights, right? You're going to know how many contracts to trade, how much risk you should have in your account, where do you exit with a gain, where do you exit with a loss. Now I'll also teach you a management or adjustment strategy that you can also help to reduce your losses. And then in module 7, we're going to do the trade execution planner. Now, I'm not going to teach you how to do this in every single broker out there. I don't have that capability, but I will teach you the things to look for in your broker. Debit, credit, midpoints, things like that that are going to get you more comfortable executing these trades. Now, what I also do is I put all this into a checklist for you. Checklist, so that way you never miss a step. So when someone's first starting out, it's always comforting having a security blanket to make sure that you did everything correctly. Okay? Now, I also want to give you this before we talk about anything else. I offer a money-back guarantee on the course. Okay? If you are not satisfied, you can return the course essentially at the end. Okay? Now, I do put a little bit of a caveat to that. The only thing I expect you to do, okay? The only thing I expect you to do is actually do the course. So if you come to the course and do the work, watch the assignments, watch the videos, if you're not happy at the end, I'll give you your money back. But you can't come to me at the end and say, Ron, I didn't really have a chance to look at this. That's not going to work. If you don't think you're going to have the time, don't do it. But also remember this, you're also going to have access to the coursework for a year too. So it's not like, if you don't see it right away, you're not going to work it. But I do offer a 100% money back guarantee. All right? So when you do this system, you'll be learning that system that can generate that 3% per month. That's 36% per year. And remember, it doesn't take a lot of time to do every week. Another story I want to share with you. This is from Joe. Joe took our course in the fall of 2019. So this is about 2020, which was a very, very difficult year. I think one of the other options guys out there from Tasty Trade, Tom Sosnoff, said, if you made money in 2020, you are an awesome trader. Well, here's Joe's story from 2020. He started trading late 2019. He said he wanted to thank me for teaching the Paycheck course. He took the class last fall. That was in 2019. And here's his results for the past 10 months as of October. He made 350 trades and he profited on 239 of them. 68% winning rate with $100,000 in profit. He said what's more exciting is that since his knowledge and experience have 24 hours, it's serious and requires effort. If you're not going to commit to it, then don't do it. It's not quite for you. It's for serious people who take their investing seriously and who are willing to put in the time. So if you're serious about this and ready to put the work in and get results, the Paycheck course is perfect for you. You're going to get the entire course delivered live to you over the next 7 weeks. If you cannot attend our live sessions, don't worry. We're all recording them too. So you'll be able to have access to a recorded session that we record ahead of time for some of them, and then you'll be able to see the recordings of more of our live sessions afterwards. So don't worry if you can't attend live. We got the recordings for you. Now, that is a value of $19.90. Now, if you're worried that, finding stocks and all that, right now, Ron, I'm working full time and I might not have the time to commit to trying to go through thousands of stocks and find them. That's okay. I get that. One of the things that I've done a lot over the past decade plus is I've traded the S&P. I'm going to show you a simple system based on the S&P 500 options. One trade type with one ticker symbol. There's one setup rule, one profit rule, one stop criteria. It's simple and easy. My colleague Brian, not the Brian from the beginning of the class, but my colleague Brian, who you're going to hear from soon, he taught this to his 14-year-old daughter and she could do it. All right? This can take you 15 minutes a week and it generates on average around 3% a month. I'm also going to give you 7 live mastery support sessions. This is going to help you basically graduate from week to week. I introduce the material in the live session. I also, again, have the recording of that if you need to see it because you can't come to live. And then I do a mastery session. It's where we can all get together, talk about the module, answer questions, walk you through assignments, all that kind of stuff. So I have 7 live modules to teach it, 7 mastery sessions to review. These are done on a weekly basis. Again, if you can't make it, it's not a problem. You can send me a question ahead of time and then watch the recording if you'd like. Early on, I showed you Bobby. Bobby posts that onto our private Facebook community. You're going to have access to a private Facebook community, okay, of all students going through the course at the same time, so access to me and my team. Plus, I do a year of live Q&A. So every month we get together. I try to see where your struggles are. You send me questions, and we want to make sure that you're simply on track. I also give you access to 7 weeks of my members-only group coaching. Now, I am not a trade advisory person, but what I do with my clients is I take live trades with them. I trade my account, and I trade live trades. Every Monday, I put the Paycheck system through its paces, and I find trading opportunities, trades that I take. If my clients want to take them with me, that's great. But it basically shows how I select, manage, and do my trades using the Paycheck methodology. Okay? Now, again, I'm not a trade advisory service, so I'm not going to be sending you emails and alerts or anything like that. I am the instructor that teaches you how to fish. That's the way I've always believed in this. I want to make sure that you understand how to do this, and you can do it on your own. So I'll give you 7 weeks access to my members-only live group coaching. Again, if you can't see it in real time, it's no big deal. I record it for you. And then I'm going to give you 7 weeks access to the software I use. I mentioned that we have tools for speed and efficiency. That's VectorVest 7 and Options Pro. I feel these are the best tools to help with these trades, and it drastically reduces the time you spend. So I'm going to give you 7 weeks access to that. Now, these are the best tools that money can buy, quite frankly. Can you do this without those tools? The answer is yes. I used to do this without the tools too. It can be done. But like I always say, I can drive to work in a Kia, but I choose to drive to work in a Mercedes. Okay? It's up to you how you want to do it. Now, for those of you that were never introduced to options properly, and you think that, well, maybe this might be too much, I'm going to include a streaming options foundation course. So if you have never done options trading and you're a little bit worried about you won't be ready for it, you can start doing this tomorrow and learning basic trades like buying a call and buying a put and some of the basic options ideas. That way, when the first module officially begins, you can hit the ground running to help you get those results as soon as possible. Now, just to show you that that's not some blow-off class, if you will, I had 2 students in one of my prior class saying, this is not the same Bobby. He said, hey, I opened up an SPX trade for real today and already paid for half the course. Just using what he found in the foundation. Shun made his first 7 option trades in his life, 5 winners, 2 losers, and he already paid for the class. So I'm not saying that that's going to happen to you. I'm just saying that that foundation class has a lot of good information in it too. So let's review the offer. The full Paycheck course delivered live and via recording if you need it. The Paycheck course, the SPX Paycheck course, the 7 live mastery support sessions, the weekly coaching and trade recommendations, access to our VectorVest and Options Pro software, our Facebook group and 12 months of Q&A, and our Options Foundation course. If you add all that up, $6,800. Okay? But I've got something a little bit better for you today. I'm going to roll up my sleeves and I'm going to work with a couple hundred people who are serious about generating income. If you choose to be one of them, together we're going to create an income system in your portfolio. And we can do this even if you've never had success with options. So you spent about an hour with me today. So if you want to join me, have me take you by the hand and help you install this in your portfolio, then instead of that $6,000 price, we can do much, much better. If you go to www.optionspaycheck.com, click on the register button in the upper right-hand corner. I think that's where it's at. It's like a gold button. You can get it for $9.95. Now that price is only good until tonight. Then the price goes to $14.95. This is your last chance to join the course with our early bird promotion at $9.95. If you wait till tomorrow, it's $14.95. Now listen, how much is this costing you not to do this, right? Think about Joe. If I would have went to Joe in the fall of 2019 and said, hey, Joe, give me $2,000 and I'll give you $100. Do you think he would take that trade? Listen, the onus is on me. Yes, I know it's $9.95. Yes, I know it's a commitment. But I offer you a money-back guarantee too, just to keep you protected. So how would your life be different if this was implemented and it worked for you? How much profit will you miss out on if you don't? How much time and energy will you spend trying to do it on your own? It's ultimately not too late to start creating income. There's an old saying that the best time to plant an oak tree is 20 years ago, so you could be under it now, enjoying the shade, got a little swing under their tire. Well, guess what? It's not too late. Go outside, plant the oak tree now, because in 20 years, you can be doing the same thing, and you won't be regretting, hey, I should have done this 20 years ago. All right? This is one of those deciding days in your life. So will it be the day you decide to take action, or will you look back and say, damn, I could have made some money this year and done it? So I hope you don't regret that decision. Don't miss the opportunity. I look forward to working with all of you in our class. Again, you can go to www.optionspaycheck.com, big register button in the right-hand corner. Remember, that $9.95 price is only available till tonight. Then tomorrow it goes to $14.95. So this is your last chance to get in on the early bird price. All right? So do me a favor. If you know this is for you, let me know. Say, Ron, I'm in. I signed up. I'm going to bring in my colleague, Brian. I didn't know what I was going to call him. I was saying my co-pilot, my co-presenter. I'm going to bring in Brian. Brian's been one of the guys in the background answering questions. And he's going to kind of do a Q&A with me. So if you have any questions that they haven't answered yet or any other questions, now's the time. So, Brian, are you there?
I'm here, Ron. Can you hear me all right?
Loud and clear.
All right. Fantastic. We actually have a bunch of people saying that they signed up a few days ago, like a week ago. We had Terrence and Robert saying that they're ready to go. Herbert is ready to go. And so the live sessions start in just a few days, which we'll talk about that in just a minute. So it's great to see people who are here for just kind of like a refresher before the class actually begins. So those of you who are signing up right now, keep an eye out in your email, because there's going to be an email with all the dates, all the times, the link to the course, directions on how to get in there, and you can start going through it today. And it'll have the link to the Facebook group. So all the information will be in that email. So check it out, and you can get in there and start going through everything today. All right. So Ron Wheeler, we had some questions. I got two pressing questions. I'm going to actually cover the first one myself, and then I'm going to head one over to you. Khan is here, and Khan actually took the course some time ago.
I remember.
And wanted to know if there's is there like a refresher or a special price for alumni who have taken this before? And the answer to that, I said I would answer that, but then I was like passing it to Ron. The answer, yes, Khan, but it has to be over a year since you've taken the class. So just call our team, and the price is $495. And some other people might be like, well, why would somebody need to take this over again? And really, a lot of times people just, if it's been like 2 or 3 years, some people haven't gotten really into it. Just like anything, you might start it and then stop it. But one of the biggest reasons is all the great bonuses that we give. They just want to get those again, So but to get that deal, call our office or send our office an email and let them know that you want to do it over again, because there's a special thing that we need to check to make sure it's been over 12 months. And we have a special way we have to enter the order for you. All right. You're welcome, Khan. I see you just typed in thank you. So, Ron, the other question that I'm going to pass over to you is for those who are wondering when the first session is. I think you actually have a slide that shows not only the first session, but kind of like all the dates and times. Would you be able to tell them about that?
You bet. So I just changed it to that slide. I do have a slide for that. The live curriculum starts this week, Thursday, August 5th. So on August 5th at 4:30 p.m. Eastern Time, I will teach Module 1 live. Now here's the deal. I already have what I call a master recording of Module 1 in our university site. So if you can't view our live class on August 5th, don't worry about it. You can go view our master copy of the course, and you can learn from the exact same slides, the exact presentation I do live. Well, Ron, what's the advantage of coming live? Well, you get to hear me. Sometimes, when you say things, you always say at the same time, but I like to do this in a live week-to-week mode. Just so you guys know, I intended to do this course, and I did it for years, 1 week at a time. So on Thursday, we do Module 1. Then you can see on next Tuesday, we do Module 2 at 4:30. And then every Tuesday into September, we do the remaining modules. So I teach those at 4:30. I do those live, and then I have a live Q&A session after the course. So I record the live Q&A for you. The master copy of the module is already up in our university site that you can view anytime you want. And then I record the live Q&A that I do at the end of it for you to keep everybody up to date and up with the class. Now, the mastery support sessions, those start Monday, 7 days from today, Monday the 9th. Now, in that mastery support session, we talk about Module 1. Everything about Module 1 to hopefully get you to where you're ready to graduate to Module 2. I walk you through the assignments, I take any questions you might have, and really just make sure that all of our questions are answered. And again, those are live, but I record them for you. You'll be able to view those in our university site pretty quick. Okay. Now, what we do for the remainder of the course is I shift those to Friday at noon. So Friday the 13th, we will have mastery session number 2 for module number 2, and then the following Fridays into September for 3, 4, 5, 6, and 7. And again, all of these are recorded for you. So if you can't make the live class, it's not a big deal. You can even send me a question via email, and I can cover it in the course if you'd like to. And you can watch the recording. So we've got you covered, no matter if you can do it live or you do it via the recording.
All right. And Ron, there was a question that said about how long in minutes are the modules? How long does it take to go through the material?
About 90 minutes. So if you plan for about 90 minutes, you'll be in good shape. You'll be able to do the live module, the Q&A session afterwards, usually about 90 minutes. Sometimes I go a little bit over that, but 90 minutes is pretty much the standard. On the mastery sessions, I try to keep those to an hour, but again, sometimes they can go up to 90 minutes. I always say plan for about 3 to 4 hours a week to put into this, between either the live course or the recordings, and then also the homework assignments. And again, you don't have to actually you don't have to actually submit homework assignments to me or anything there, but every week I do try to have you start to implement what you're learning.
All right. And Paul, I can answer your question that just came in. If you're a subscriber to VectorVest and you sign up for the options paycheck, you would still continue with your monthly subscription to VectorVest, and that would stay the same. You would just be in the course. So we don't just stop your subscription and have you in the course. So yeah, your monthly, if you're on a monthly subscription to VectorVest, that would stay the same. All right. And Dwight, you say you signed up, but you haven't gotten the introduction email. My recommendation would be just call our office, and I'm going to ask John if he could put our phone number in the chat. Because one of a few things could have happened. It could have been we've had some people type their email address incorrectly on the order form. The other thing is it could go to junk or spam. So I would recommend that you also do that, Dwight. Check your junk or spam folder or your clutter folder. Check that. The other thing that it could have happened is maybe, and this is probably unlikely, is that your email service provider is just blocking our emails. So check it. If you call our office, we could send it manually to you, and then that way you get all the great details and you can get in there and start going through the course material right away. All right. All right. So Ron, there was a gentleman earlier. Let me go back to his question. He has a retirement account, and he wants to know, can this be done if most of his money is in his retirement account?
From my history, I would say the majority of people that have tried to do this in their retirement accounts, their IRAs and things like that, they're allowed to do it. You might have to call your broker. I would definitely call your broker, because I have come across a couple of IRA accounts that were not able to do this based on how they were set up. But most IRAs can support this type of trading. You just have to give them a call and say, here's what I want to do. I want to do vertical credit spreads. And a lot of times they'll just make you sign another risk form to say, hey, I understand the risk involved here. That's usually what you have to do. But every now and then I do come across a client that says, hey, I was going to do this in my IRA, but they won't let me do it. So now what? Well, in that case, you have to open up a different account to do it. But, the most of the time I've seen IRAs support this. But every now and then I hear a story of one that doesn't.
All right. Next one is actually something that came in very early in today's session, or earlier, and I believe you were addressing it as you were going through the training, but I'm just going to bring it up just in case. Is somebody had a smaller account and they just wanted to know about how big of an account does somebody need to do this to kind of start off, and is there kind of like an ideal sweet spot that would be a preferred amount?
Yeah, I mean, you can start trading this with as little as a couple $1,000. One trade would, for margin requirements and things, you could trade it at one contract and you might only have to have $300-400 in your account to do it. Now, most brokers are going to want you to open up an account with like $2,000 or $5,000, but even those minimum balances will allow you to trade one trade or one S&P contract. So you can go with the bare minimum like Brian did at the beginning, not you, Brian, but the other Brian who started with $6,000. Now, if you're looking for what I think is a decent starting amount, I would probably say anywhere from 25 to 50,000, because what that does is it gives you more range. You can trade some S&Ps, You can trade a couple of different stock trades all at once. It allows you to kind of expand and diversify a little bit. So 25 to 50,000 can do that for you. But listen, you can trade 200,000, 300,000, 400,000 with this too. But there's really the broker minimum is really what you would need to start with, and you can take 1 or 2 trades.
All right, fantastic. Thank you very much, Ron. And just a quick reminder for everybody that the price goes up at midnight tonight. So it goes from $9.95 to $14.95. So it's like a $500 savings if you get in now compared to waiting till tomorrow. Now, if you're an elite member of VectorVest, it'll be $9.95 until Wednesday. But the registration for everybody will close on Wednesday at midnight. So there is a time deadline for everybody, Wednesday at midnight. Unfortunately, and then a lot of the bonuses will go away. All the live things that Ron does with you, the bonus software. So now is the time, because we won't open up registration again for several months. And now is a great time to get yourself ready. It is what, August, towards the end of the year. You can get yourself ready now. I think, Ron, you were showing an example of the gentleman Joe who had sent in that email. I mean, he did it in October. Now it's August now. Imagine if he had waited and he didn't do it. I think he said in his email he was up like $100,000 in that first year. So. Yep. All right. We had a couple more things. By the way, folks, if you have a question and that you need answered, like you're on the fence, you're thinking about taking this class, now's the time, because this is the last time we're going to get together with you live to be able to answer your questions. Other than that, you'll have to call our office and talk to somebody. But now you've got us, you've got Ron Wheeler here, who's the instructor of the class. Now's a great time to ask those questions. And so I'm going to go back up to this one from William. William says, Ron, to average the 3% per month just using the SPX system, is there a certain number of contracts that you would have to trade?
No, because it's all proportional. So if you had one contract, right, and you traded that one contract, and let's say you had $5,000 and you traded that one contract, I mean, 2 winning trades would get you a $300 gain. So, you're trading proportionally to how much money you have. So if you did it with 100,000, you would do, more contracts. If you do it with less. So no, it doesn't make a difference. I mean, 3% of whatever you start with is 3%. We can bring the contracts up or down to get to that level.
The next question is from Emmanuel. He wants to know, do we need real-time quotes for this? Or if I have end-of-day quotes, can I use that?
It's better to have at least intraday quotes. Now, your brokers will always have real-time quotes, but if you're going to be using VectorVest, at least for finding trades, I always say intraday is a little bit better, only because it gives you the ability to, run your scans anytime you want. You don't have to have live per se, but intraday does give you a little bit better, a better idea, because you can trade during the middle of the day too, based on current behavior.
Next question is from Rushit. He says, is there a specific margin requirement for trading the SPX?
It's like when we do our 10-point trades, it's $1,000. It's like $100 a point for the S&P. So if you do like a 10-point spread, it's $1,000. If you do a 20-point spread, it's $2,000. We typically do 10 and 20-point spreads. So for per contract, we'd be going anywhere from $1,000 to $2,000 per contract for margin.
All right. So remember, if you have a question, type it in now, because we have about 3 minutes, and then we'll be wrapping things up for the day. And I'm just taking one last quick look here, Ron. And Sanjay says, is it the same price for VectorVest subscriber? So if you're a VectorVest subscriber right now, yes, $9.95, it's the same price, whether you're a VectorVest subscriber or not, because we're going to teach you the same thing. We're going to teach you how to become, or how to use options to generate an income stream for yourself. All right. So, Ron, is there anything that you wanted to touch on before we start to wrap things up?
Based on the questions, I don't think so. I think we kind of hit all the good ones.
All right. And Khan, I just saw your question, and yes, I think the answer is yes to that. And folks, I'm going to pass it over to Mr. Ron Wheeler to wrap things up for the evening.
All right. Well, thank you, Brian, and thank all of you. I saw a couple of you guys that are new for us, and then some of you guys that are already signed up and coming. Well, welcome to all of you, whether you've already signed up or signed up tonight. I appreciate it for sure. I want to thank you for attending our presentation tonight. I hope you got some good value out of it and understanding how to become successful at options. Remember, it's all about that system, and that's what the Paycheck is all about. So with that, I'll leave you go. Have a great evening, everybody, and I wish all of you the best for 2021 and going forward. Thanks again, everyone, and we'll see you next time.